When you take a loan, you have to pay it back, right? Well, not always. CHFRY is a new type of lending protocol that automatically pays back your loan. How is it possible? How does it work? That's what we'll see in this video. If you don't know me, I'm Julian, and on Hit the Blocks, I teach blockchain development. Full disclaimer, this video is sponsored by the CHFRY protocol. CHFRY Finance is a lending protocol. Like other lending protocols, you have to provide a collateral before you can borrow. But unlike other lending protocols, you don't have to pay back what you borrow. It's paid back automatically by the protocol itself. Another protocol called Alchemix already introduced this idea of automatically paying your debt, but CHFRY added some innovations like generating some yield using a flash loan. Let's see how this works. There are 4 subcomponents in CHFRY. First, we have the FRYer, which provides the basic lending functionality. Before users can borrow, they have to provide a collateral to CHFRY. You can provide 3 collaterals, USDC, USDT, or DAI. You have to provide this collateral by making a deposit to the vault of the FRYer. When users make a deposit in the FRYer, they can mint up to 50% of their deposited amount in the form of FUSD, the stablecoin of CHFRY Liquidator. So far, CHFRY looks like any lending protocol, but where it starts to be interesting is how interests are paid. The assets deposited by users as collaterals are put to work to earn some yield and pay off the loan. That means users just have to wait until enough yield has been generated with their collateral and they don't need to pay off the loan themselves. 20% of the collateral is set aside for flash loans and the remaining 80% is deposited to Wi-Fi or curve pools to gain some reward. Because there are 2 sources of yields that are not correlated to each other, the debt repayment is less likely to be affected by market fluctuations. The next component of CHFRY is Oven. To understand the Oven, first we have to mention FUSD, which is the stablecoin of CHFRY. That's the asset that you can borrow in the CHFRY protocol. The Oven acts as a debt converter that allows users to stake their FUSD and have them converted into their base assets over time at a fixed 1-to-1 ratio. Users can always convert the FUSD in the base assets at 1-to-1 ratio even if the peg is lost in the open market. And in any case, this event is very unlikely because there are multiple mechanisms to maintain the peg. The next component is the Cheese Factory. The Cheese Factory is a set of staking pools where you can receive some cheese tokens, the governance token of CHFRY. There are 5 pools available. First, you have the FUSD3 CRV LP pool. So the purpose of this pool is to establish a peg as close as possible to $1 and to provide deep liquidity for FUSD. First, you provide liquidity on the pool on Curve by providing a combination of FUSD, USDT, DAI, and USDC. You get your LP token, and then you go to the website of CHFRY Finance and you can stake this LP token and you receive some cheese rewards. Then on SushiSwap, you have the Cheese ETH LP pool. The purpose is to provide a liquid market for the cheese governance token. So you have to provide a liquidity in the Cheese ETH LP pool on SushiSwap. You get your LP token. And on the website of CHFRY Finance, you stake this LP token and you're going to receive some cheese reward. Then you have the FUSD pool. The purpose is to incentivize the holding of FUSD and it's a very low risk way of receiving some cheese token. And this is very easy to use. You can directly stake your FUSD token on CHFRY and you will receive some cheese reward. Then you have the cheese pool. The purpose of this pool is to reward the cheese holder who might be too risk averse to participate in other pools. And using this pool is very easy. On the website of CHFRY, you can directly stake your cheese token and get some cheese reward in exchange. And finally, there is the ALUSD pool. ALUSD is the stablecoin of Alchemist, which is another protocol similar to CHFRY. And the purpose is to incentivize the ALUSD token holder to stake the ALUSD on CHFRY to receive some cheese reward. And finally, the last component of CHFRY is the Flash Flyer. Flash Flyer is the flash loan feature of CHFRY. Anybody can tap into the liquidity of CHFRY for flash loans. It costs 0.06% to use the flash loan, which is about 30% less compared to other flash loan providers. On top of it, if you use a flash loan, you will get some cheese reward. That's what is called flash loan mining, and to my knowledge, this is the first time a DeFi protocol gives reward for just using a flash loan. If you are a developer and you want to use the flash loan feature of CHFRY, you can check out this tutorial in the official documentation. And even if you are not a developer, you can still experiment flash loan mining by using a UI provided by the team of CHFRY. With this UI, you use a flash loan that just returns the money instantly, so you don't really make any practical use of the flash loan, but you still get the cheese reward for using the flash loan. Next, we are going to talk of Cheese, the token of the CHFRY protocol. The Cheese token is a governance token. It can already be used for governance, and in 2022, a DAO will be deployed. 75% of these tokens will be used as farming rewards, 10% of these tokens are for the team, and they are vested over a period of 2 years, which will limit the selling pressure coming from the team. 0.5% of these tokens were airdropped, and 1% were used for liquidity bootstrapping on decentralized exchanges. Next, we are going to talk of smart contract audits. Smart contracts of CHFRY Finance were audited by PegShield, a smart contract security company that already audited some high-profile projects like Maker or the SET protocol. I went through the report and they didn't find any significant problems. The audit did mention that there are some potential trust issues with the admin keys because currently the admin of the project can decide some important parameters of the project like adding new vaults and configuring protocol parameters. And the recommendation is to switch to an admin address controlled by a DAO, and the migration to a DAO governance is already in the roadmap of CHFRY Finance. So next we are going to continue with a discussion between me and the team of CHFRY. Okay, so now that you understand the basics of the CHFRY protocol, next we are going to ask a couple of questions of the project lead of the project, 0x Billy. Welcome, Billy.
Hello, everyone. Glad to be here.
Yeah, Billy, so it's great to have you so that we can get some answer from the team. So first of all, Billy, can you tell us briefly what you do for CHFRY and how you got to work on this project?
Yeah, sure. I'm basically the project lead for CHFRY Finance. I'm coming from a background of fintech industry. And also I got a couple of friends and we were kind of starting to learn about crypto, learn about all this software development during the past couple of years. Used to just be like buying some Bitcoin or Ethereum, and then we gradually get more interest on maybe we should build something together. So I gathered a bunch of friends from finance industry, software industry, and starting working on this project.
Yeah, it's a very typical combination for DeFi project.
Mm-hmm.
If you have a combination of finance and software experience, like this is really the best. So can you tell us what's the mission, what's the goal of CHFRY, and what kind of value does it add to the existing DeFi ecosystem?
Yeah, absolutely. I think maybe I should start with a short introduction to the CHFRY. So CHFRY is a new DeFi lending protocol that powers this automated repayment of debt through diversified yield strategies. So give you a short overview. The protocol allows users to deposit stable coins, either in the form of DAI, USDC, or USDT as collateral to borrow against, and deploys this collateral into DeFi yield aggregators and utilize it for flash loans. In order to generate yield that will automatically pay off the loan. And really the mission, the goal of CHFRY Finance is democratizing the flash loans by making them more accessible to general users through developing a series of flash loan powered applications, and also generally providing attractive diversified yields for both less sophisticated participants who have limited crypto knowledge, and also for experienced members who might have a higher risk appetite, so that they could actually use the flash loan to do the stuff that they want to do. So just like you mentioned, we aim to go beyond the groundwork that Alchemix has laid out in the real-world viability of yield-backed synthetic assets.
So there's a lot to unpack here. So you say that CHFRY want to go beyond Alchemix. So can you elaborate on that?
Yeah, sure. Just like you mentioned, yes, we aim to go beyond the groundwork that Alchemix has laid out in the real-world viability of yield-backed synthetic assets. So Alchemix pioneered this yield-based debt model. The idea of combining yield aggregators such as yield finance, with collateral-based debt, such as compound. So instead of paying interest on over-collateralized loans, you can actually use the interest earned somewhere else on the collateral to pay off the debt over time. This is a very simple idea, has proven to be overwhelmingly successful in the DeFi community, and definitely provides a clear improvement over previous DeFi interest-bearing loans. Then on the other hand, we have, flash loans, right? An instantaneous and unsecured DeFi lending solution where a loan is borrowed and paid back all in one transaction. So popularized by Avi, exclusive to only DeFi, offering unique investment trading opportunities. However, currently, only accessible to the users with very extensive technical knowledge, and we want to change this. So just in summary, CHFRY Finance introduces a platform that combines both flash loans together with the yield-backed debt model, and enhances previously proposed frameworks. So we aim to unlock the capital efficiency by combining yield aggregators with the yield-based debt model, and democratize flash loans to a wider DeFi community through developing these flash loan-powered applications, and also diversify the yield source by tapping into the potential of flash loans. So this was this way, CHFRY goes beyond the groundwork laid out by the pioneer Alchemix, and aims to solve the existing DeFi market challenges related to capital inefficiencies, correlated yield strategies, and also the underutilization of flash loan services.
Wow, so it really seems like you guys have a very, very ambitious objective. And I'm wondering, what have you accomplished so far out of all these things that you have on your roadmap?
Yeah, sure. So just to give you a short overview of our roadmap, in the first and second quarters of 2021, we completed market research, idea and concept development, project planning, and team formation. Additionally, we completed the beta stage development and also the security audit of the protocol. So in the third quarter of 2021, we have started community building, released the CHFRY white paper, and launched the testnet. Furthermore, in the same quarter, we added NFTs, as a marketing and also operation tools to the CHFRY ecosystem. And most importantly, we're gonna have the IDO. So our plans for the fourth quarter of 2021 and the first quarter of 2022, it includes the DAO building, the flash loan powered application building. And we're also gonna organize the hackathons, which will encourage the crypto community to build flash loan powered applications or other products on top of CHFRY. And also developing a cross layer FUSD, which is the stable coin that you could generate in the CHFRY Finance protocol. And then we're gonna introduce a full on-chain governance system, support multi-chain interoperability. Also, at the meantime, we're gonna have more collateral types. And the last one, we're gonna have this CHFRY Vault. Just like we mentioned before, there's gonna be a place for the diversified yield. And the CHFRY Vault will serve as this place to aggregate different sorts of yield generation strategy.
So can you tell us more about the flash loan side of the project? Because that looks super interesting to me.
Yeah, sure. So to answer your question and elaborate on the flash loan powered applications. So as I mentioned, it is our goal to democratize flash loans. So we strongly believe that it should not be a must to have an advanced technical knowledge to use flash loan. As such, we aim to develop applications that will actually make flash loans accessible to everyone. And currently, we are, aiming and also exploring different sorts of use cases for flash loan. So there are a couple of them. One is the self-liquidation, because liquidation on-chain is really costly. You don't want to actually do it in a passive manner. You want if when the price doesn't go on your favor, you probably want to do the liquidation or trigger the liquidation yourself. And flash loan could actually help you do that without paying either a penalty or making the procedure really costly for yourself. Second one, we're gonna use that for reducing the debt position. Use part of collateral to pay back part of debts powered by flash loan, managing collateral rate and the position. And also the third potential use case is to leveraging long position by leveraging collateral to earn capital gain when collateral surges. So it's kind of like a general leverage that you could carry in the DeFi space. It's like everything that you do, you could add on leverage.
So there are already some projects that try to make flash loan more accessible for users like Furukombo, but in general, this project focus more on arbitrage. But in your case, it seems you're more focused on the utilitarian use case of flash loan, right?
Exactly. We want to make this, flash loan as a backbone to provide general capacity. For example, taking up leverage or self-liquidation for the users.
So you also mentioned hackathons. So that means you want developers to build on top of your project. And in DeFi, there are two kinds of project. One kind of project which is more geared to end users, and another kind of project which is more geared to developers. So does it mean you're in the second category? This is your target. You want to build a sort of infrastructure that developers will use to build their own DeFi project?
Well, I feel it doesn't really, this two audience doesn't really contradictory to each other. On the opposite side of the story, we could actually create a synergy between them, because we need these very non-technical true users in the DeFi space, want to do a bunch of stuff, but they don't know how to code. If the developers build something, but there isn't enough user around it, then developers wouldn't be motivated to build such applications. So we want to, have this general protocol out there. So we try our best to, use all sorts of, method to attract end users. But at the same time, we provide the right tools for the developers to build good applications on top of it. So if you are a developer, you come to this protocol and you build some stuff, you don't need to go out to look for the potential users. That's a very hard, problem. You could just, use the users of this protocol. So it's kind of like a good synergy between making a protocol, but I mean, by making a protocol both to the developers and to the end users.
Okay, so it seems to me that you are targeting both developers and users. Okay, I get it. So next, can you tell us a little bit about the governance model of CHFRY and tell us a little bit about the token?
Yeah, absolutely. So CHFRY's initial governance will be utilizing Gnosis SnapSafe. However, before the proposal is submitted for voting on Snapshot, there will be an informal governance process. So in the community, for example, Discord, there will be separate channels discuss, for example, token swaps, protocol roadmap, governance modifications, and the grants. So the idea is that gamer enough community support can be submitted for voting. So community member may draft a soft proposal for Snapshot for an official community vote. So such proposals as a temperature test or a poll, but do not guarantee implementation. So the idea needs to be adopted by the development team with a finalized code audited and submitted via the formal governance process. So to make it concrete, for the formal governance process, there are gonna be 4 steps. Number 1, there has to be executable code that is transfer of assets can be submitted for voting on Snapshot. And the second one is the CHIS token holders can vote there will be requirements for quorum and vote success. And third is that the results of the vote will be pushed off-chain to on-chain Oracle reality.is, and an escalation or challenge process will begin. And the fourth, if all these previous steps succeed, the code will automatically execute to transfer the treasury assets. So that's basically like the formal governance process. Just a little bit more on this Gnosis SnapSafe. It is an off-chain to on-chain governance system that is primarily used to control the transfer of treasury assets. As CHFRY matures, we imagine that we upgrade to a full on-chain governance system, similar to Compound Bravo. This will give more control to cheese holders to control governance parameters and protocol parameters, such as new vault strategy integration. So for safety reasons, the core team shall own the multi-sig keys for the internal ecosystem addresses. The medium-term goal is to move these to new addresses that will only be controlled by the DAO module. So that's kind of like a general plan for how to build a DAO for CHFRY.
Wow. Seems pretty ambitious. And so you want to have a full on-chain governance system from next year, right? This is a roadmap.
Exactly. Wow. Yep. Also on the token side, we use a token model with a fixed supply, and most of the tokens, like 75% of the total supply will be used as a reward for the farming program for CHFRY Finance. And the other 25% that covers the token distribution for the DAO treasury, and also the back bounty, initial IDO allocation. Also, the team has a portion of that, but it's based on like a vesting schedule over the next 2 years. So if you want to, for example, like learn more about the specific number and allocation, could go to our, the GitHub page to see what exactly every detail is in the white paper for this.
All right, so thank you very much, dear X-Billy. That was super interesting. If you guys are interested in the CHFRY project, I will put in the description the link to all their social media, Twitter, Discord, Telegram, etc. So don't hesitate to interact with the community, ask them questions. Thanks, dear X-Billy. Thanks for your time, and see you another time. Bye, everybody. Bye.
Thanks for having me. Bye.